Practical accounting. Number 12. The accounting process. Accounting is easy when we look at it from the business buying and selling cycles. Business is just the movement of product and cash. These movements are both in and out. Good business managers keep track of their business by keeping track of the movements of product and cash. These transactions are recorded by the bookkeeper into the books of accounts. The accountant translates these records into income and expenses, assets and liabilities and cash flow. Then summarizes them into the following financial reports. Number 1. Profit and loss. Shows the performance of the business. Income less expenses. Number 2. Balance sheet. Shows the worth of the business. Assets less liabilities. Number 3. Cash flow statement. Shows the cash position of the business. Cash in, less cash out. The accounting process is easy to understand, and can be broken down to 3 steps. Number 1. Source documents are created for every transaction in the buying and selling cycles. It's critical all receipts, invoices, and vouchers are sent to the bookkeeper on time, for the reporting period. Number 2. The bookkeeper records the information from the source documents into the books of accounts. Number 3. The accountant summarizes the books of accounts to create the 3 financial reports for management to keep track of the business. Another valuable business tip from LearnAccountingFast.com. Next. Recording of other operating costs.